Let me guess. You wake up early, go to work, deal with meetings, deadlines, stress, and somewhere in between all of that, you're trying to learn how to trade. You open Instagram and see people saying just trade London session or just watch the charts all day, and you're thinking, bro, when? Here's the truth no one tells you. Most trading advice is made for people who don't have jobs, and that's exactly why it's not working for you. But here's the part that might actually surprise you. Having a 9 to 5 is not the reason that you're struggling with trading. In fact, if you do this properly, it can actually be your biggest advantage. If you've ever felt like trading just doesn't fit your life, like you're always late to moves, forcing trades after work, or burning out trying to copy full-time traders, this video is for you. Because in the next few minutes, I'm going to break down how people with real jobs actually trade profitably without having to stare at the charts all day, without overtrading, and without turning trading into a second full-time job. So if you want trading to fit around your life, not take it over, watch this video properly. This might be the mindset shift that changes everything. If you work a 9 to 5 and you think trading means staring at charts all day, stop right there, because that idea alone is probably the reason trading hasn't worked for you yet. And no, it's not because you're lazy, slow, or not built for this. It's because you've been trying to trade using advice that was never designed for someone with a real job. If you've ever opened the charts after work, felt like you already missed a move and thought, what's the point? This video is exactly for you. Just so you know where this is coming from, I'm not speaking from theory here. Over the years, I've worked with people in the exact same position. Engineers, accountants, warehouse workers, people doing long shifts, all trying to make trading work around their job, not replace it overnight. So everything I'm about to share with you isn't some ideal, perfect world trading advice. It's built for real life, real schedules, real constraints. Now, I need to be straight with you for a second because this is where most people with a 9 to 5 get trading completely wrong. If you're trying to trade the same way as someone who's at home all day, you're setting yourself up to fail. Watching the 1 minute chart, jumping in and out of trades, reacting to every candle, that style of trading demands constant attention. And when you have a job, you don't have that luxury, unfortunately. What usually happens is this: you check the charts when you get a spare minute, you feel like you've missed the move, so you don't chase it. Then price pulls back, stops you out, and now you're frustrated, but you can't even manage the trade properly because work comes first. That cycle right there is the reason so many people think trading doesn't work with a job. And here's the uncomfortable part. Trading with a 9 to 5 means you cannot rely on speed, reactions, or constant monitoring. You have to rely on a structure, patience, and pre-planned decisions. Once you accept that, everything changes. So I've got this Word document here, which I've already pre-prepared for you guys. I'll probably put a download link in the description below if you guys want to download this Word document. It is just at a top level, but I'll explain everything in this video for you guys. So let's go through the first point, the core principle. Time does not equal profit in trading. Here's the core idea you need to understand. And once this clicks, trading with a 9 to 5 becomes way simpler. In trading, time spent does not equal money made. This isn't a job where you get paid for working longer hours. You don't earn more just because you watch the charts all day. In fact, most of the time, the more you stare at price, the worse your decisions get. Think about it like this. One well-planned trade that you took calmly with a clear reason can outperform 10 emotional trades you took just because you were available. The market doesn't reward effort, it rewards precision. And this is this is actually good news if you have a job, because it means you don't need more time, you need better timing and better decision making. That's why full-time traders don't just sit there clicking buttons all day. Most of their time is spent waiting, planning, and letting price come to them. Once you stop trying to trade every move and start focusing on one or two high quality opportunities, trading suddenly fits into your schedule instead of fighting against it. Point number 2, choosing the right trading style for a 9 to 5. Alright, so if time spent doesn't equal profit, the next question would be what type of or style of trading actually works when you've got a job. And I'll make this really simple for you. Say you're working a 9 to 5. The worst thing you can do is choose a style that depends on you being available every minute. That means scalping, super low time frames, constant entries, constant management, because those styles don't just need skill, they need attention. And with a job, attention is the one thing you don't have unlimited access to. Because think about it. What happens when you enter a trade and then you get pulled into a meeting, or you're driving, or your manager calls? Now you're half in, half out. You're checking your phone like a crackhead, and trading becomes stressful instead of structured. So what works instead? You want a style that's built around pre-planning, higher quality setups, and less decision making during your workday. For most people with jobs, the sweet spot is using higher time frames for direction, like the 4 hour or the 1 hour, and then using something like the 15 minute to fine tune an entry. This way, you're not reacting to noise, you're trading a plan. And I'll give you an example. Let's say you check the charts in the morning before work. You mark out a key level, maybe a previous high, a demand zone, an order block, whatever your trading model is. Now, instead of staring at price for hours, you set alerts at that area and then you go live your life. When price gets there, you come back and you make one decision. You either take the trade or you don't. That's a 9 to 5 friendly trading style. Less screen time, more structure. And the best part is it also helps your psychology, because when you're only looking for one clean setup, you're not forcing trades out of boredom. You're not chasing random moves, and you're not building that bad habit of I need to be in something. So if you're currently trying to trade like a full-time trader while living a part-time trading lifestyle, don't be surprised that it feels impossible. Your strategy has to match your schedule. Point number 3, the best times to trade with a 9 to 5. Now, let's talk about something that trips up almost everyone with a 9 to 5 job: when you should actually be trading. Because this is where people waste the most energy. Here's the reality: you don't need access to the market all day. You need access during specific windows where the market actually moves with intention. And for most people working a standard job, there are really only 3 realistic options. The first one is before work. This is where a lot of traders get their best results, not because the market is magical in the morning, but because your mind is fresh and you're not distracted, you're not rushed, and you can actually think clearly. For example, you might spend 20 to 30 minutes in the morning marking key levels, identifying the bias and setting alerts. You're not trading yet, you're preparing. That alone puts you ahead of 90% of people. The second option is during your day, for example, over your lunch break. Now, this isn't about forcing trades. It's about checking whether price has reached an area you already planned for. You're not analyzing from scratch. You're simply answering one question: is price where I expected it to be? It's either yes or no. And if it's not, you close the chart and you carry on with your day. The third option is after work. This is where you have to be the most disciplined. Disciplined because after a full work day, your mental energy is lower. And this isn't opinion, it's backed by decision fatigue research. The more decisions you make throughout the day, the worse your later decisions tend to be. That's why after work, trading should be simple and very selective. No over analyzing, no forcing trades because you finally have time. And here's the key thing most people miss: you don't need to trade every session. You might only trade London Opens 2 or 3 times a week, or New York once or twice. That's completely fine. Trading with a job is about choosing quality windows, not chasing constant opportunities. Once you align your trading with your energy levels, not just the market hours, everything becomes easier. Point number 4, the power of alerts. Basically, not watching the charts. Now, if you take one thing from this entire video, let it be this. If you have a 9 to 5, you don't need more screen time. You need a better system. Because the biggest trap job traders fall into is thinking, if I just watch the charts more, I'll catch the move. But what actually happens is the complete opposite. You start watching every candle, you react to every tiny push up and down, and you end up taking trades you didn't even plan just because you're looking at it. That's not trading, that's boredom mixed with impulse. And having alerts fix this. Here's how I want you to think about it. Your job is not to sit there and hunt trades all day. Your job is to identify where a trade might happen, and then you let the market come to you. So instead of staring at price for hours, you do your analysis once, maybe in the morning, and you mark out your key zones and levels. Then you set alerts at those prices, and now you're free. You can focus on work, you can live your life, and you're not constantly feeding your brain this stream of price noise that makes you overthink everything. Because when the alert goes off, it means one thing: pay attention now. Not enter a trade now, just it's time to check if your setup is forming. Let me give you a real example. Say you mark a key level on GBP USD, a previous day high, a supply zone, order block, whatever your model is. Price is currently nowhere near it. If you sit there watching candles, you're basically waiting for something that might take hours. But if you set an alert at that level, you literally forget about it until it matters. Then the alert hits, say during your lunch break. You open the chart and you ask yourself a simple question: is my condition met? If yes, you execute. If no, you close the chart. That's how you trade like a professional with limited time. And there's another benefit people don't talk about. Alerts reduce emotional trading, because when you're staring at charts, you start feeling like you need to do something. When you use alerts, you only engage when price is in the area you already planned for. So you're trading your plan, not your mood. Okay, point number 5, a simple daily trading routine. Now, let me simplify everything we've talked about into a daily routine, because this is where most people either make trading work or overcomplicate it and quit. Trading with a 9 to 5 only works when your routine is simple enough to repeat even on busy days. So here's exactly how I want you to think about your trading day. Step 1 happens before work. You sit down for 20 to 30 minutes. That's it. No rushing, no pressure to trade. All you're doing here is preparation. You're asking, what is the overall market direction? Where are the key levels price might react from, and under what conditions would I actually take a trade? Once you've answered those questions, you mark your levels and you set your alerts. And this is important. You're not trying to be predictive. You're just defining areas of interest. That's step 1 done. Step 2 happens during the working day. And honestly, this is the easiest part. You don't sit there checking charts every 10 minutes. You don't adjust levels out of boredom. You let the alerts do the work for you. If no alert goes off, you don't trade. It's simple as that. And if an alert does go off, maybe during lunch, maybe after work, you open the chart and you check one thing: is the setup forming the way I planned earlier? Not does it look exciting? Not can I force this? Just, is this what I was waiting for? Yes or no. If it's a no, you close the chart and you carry on with your day. Step number 3 is execution. When everything lines up, you execute exactly as planned. Your risk is already defined. Your stop is already placed. You're not negotiating with yourself in the moment. That's what keeps emotion out of it. Decisions were made before money was on the line. Step number 4 is walking away, and this is where most people mess it up. Once you're in a trade, you don't babysit it. You don't keep checking every candle. You just trust the structure you built earlier. If the trade wins, great. If it loses, that was already accounted for. And the final step happens at the end of the day. You review not every missed move, not every what if. You ask one simple question: did I follow my process today? Because profitable trading isn't built on perfect trades, it's built on repeatable behavior. When you trade like this, trading stops feeling stressful, it stops feeling rushed, and it starts fitting into your life instead of competing with it. Point number 6, risk management for people with jobs. Now, this next part is non-negotiable, especially if you have a job, because when you're working a 9 to 5, you don't have the time or emotional space to recover from reckless risk. One bad trading day shouldn't bleed into your working day. And one losing trade should never put you in a position where you're distracted, stressed, or trying to make it back. That's why risk management for job traders has to be boring and strict. Here's the first rule. Your risk per trade should always be fixed. Not how confident you feel, not how good the setup looks, fixed. Because confidence changes, emotions change, rules don't. When you define your risk before entering a trade, you remove the need to make decisions after you're already involved. And that matters because with the job, you can't sit there micromanaging trades all day. The second rule is this: your stop loss must be placed where the trade idea is invalidated, not where it feels comfortable. A tight stop just so you can increase position size is not good risk management either, by the way. It's disguised gambling. You want to know if your stop is hit, the idea is wrong. Not that you got shaken out because you didn't want to accept a small loss. Now, the third rule is accepting losses before they happen. When you place a trade, you should already be okay with losing that amount. If you're watching the trade and thinking, I can't afford this to lose, your risk is too high. And here's something people with jobs need to hear. Revenge trading hits harder when you're employed because you can't immediately refocus on trading. You still have emails to answer. You still have your responsibilities at work. The emotional spillover is what destroys accounts slowly. That's why small controlled losses are your protection. You're not trying to win big, you're trying to stay consistent. When your risk is controlled, trading becomes background noise, not the center of your mental energy. And that's exactly how it should be when trading is working around your life. Moving on to point number 7, psychology, the hidden advantage of a 9 to 5 trader. Now here's something most people never talk about, and it's actually one of your biggest advantages. Having a 9 to 5 can make you a better trader, not worse. Because think about it. When your rent, bills, and lifestyle don't depend on your next trade, you're not trading from desperation. You're not forcing setups because you need a win. You're not trying to squeeze money out of the market just to survive. And that emotional distance is powerful. Full-time traders often struggle because every trade feels heavy, every loss feels personal, and that pressure leaks into decision making. As a 9 to 5 trader, you don't have that weight. If you use it properly, your job gives you stability, and that stability gives you patience. It allows you to wait for better setups. It allows you to skip trades that don't fully meet your criteria, and it allows you to walk away from the charts without feeling like you're missing out on income. That's a massive psychological edge. Another advantage people overlook is structure. When you work a job, your day already has boundaries. You can't trade whenever you feel bored, and that actually protects you. It limits overtrading, it limits impulsive decisions, and it forces you to be selective, and selective traders survive. Here's a mindset shift I want you to make. Your job is not the enemy of your trading. Poor expectations are. Once you stop trying to escape your job through trading, and instead let trading grow slowly alongside it, your psychology becomes calmer, more disciplined, and more consistent. And in trading, consistency beats intensity every single time. Point number 8. Common mistakes 9 to 5 traders must avoid. Now, this part is important because if you avoid these mistakes, you'll already be ahead of most people trying to trade with a 9 to 5 job. The first mistake is trying to trade like someone who doesn't have a job, watching 5-minute charts all day, taking multiple trades just because price is moving, managing trades candle by candle. That style of trading demands constant attention. And when you can't give it that attention, your execution will suffer. Entries become rushed, stops get moved, decisions get emotional. A 9 to 5 trader needs structure, not speed. The second mistake is overtrading because you feel like you don't have much time. This usually sounds like, I don't get many chances, so I need to take this one. And that mindset quietly destroys accounts. Limited time doesn't mean you need more trades, it means you need better filters. 1 or 2 clean, well-planned trades a week can outperform 10 forced ones. Trading rewards patience, not urgency. And the third mistake is constantly changing strategy. 1 week it's one model, next week it's another, then a new indicator, then a new time frame. When you already have limited screen time, inconsistency becomes even more expensive. You never give one approach enough time to actually work. Progress in trading comes from repeating the same process, not chasing the next idea. Another mistake is trading when you're mentally drained. After a long workday, it's easy to sit down and think, this is my only chance today, I have to trade. But tired decisions lead to sloppy execution. If your focus isn't there, skipping a day is a professional decision, not a failure. And the last mistake, the one that causes the most damage, is treating trading like an escape plan. When every trade feels like it needs to change your life, pressure takes over. You start forcing outcomes instead of following rules. Trading works best when it's boring, steady, and unemotional. Build it alongside your life, not as a way to run away from it. Alright, the final point, just a final summary. So let's lock this in. Because if you remember nothing else, just remember this. Trading with a 9 to 5 is not about trying to squeeze in more hours. It's about building a process that works even when you're busy. So the formula is quite simple. Stop trying to trade like a full-time trader. If you can't watch charts all day, don't choose a style that requires it. Use higher time frames for directions and be selective. Your goal isn't to catch every move, it's to catch the clean ones. You plan once, then use alerts, mark your levels in the morning, set alerts and let the market come to you. No more checking charts every 5 minutes, no more jumping in just because price is moving. You want to trade in realistic windows, before work, lunch break, or after work, whatever fits your schedule, but don't force it every day. You're allowed to trade 2 or 3 times a week if that's what keeps you consistent. Risk management is non-negotiable. Fixed risk, planned stops, no emotional decisions. Because your job comes first, you can't let that one trade mess up your day. And finally, your 9 to 5 is not a disadvantage. It's stability, it's structure, it's the thing that stops you from forcing trades. If you build this properly, trading becomes simple. You prepare, you wait, and you execute when it's clean, and you review. That's it. And when trading feels calm and boring, that's usually when it starts working. Now, before you click off, let me ask you something. If you're working a 9 to 5 and you're trying to make trading fit around your life, I genuinely like to know, what does your trading schedule look like right now? Drop it below in the comments, whether you trade before work, during lunch, after work, or you're still trying to figure it out. I've read and replied to a lot of them, and it helps other people in the same position too. And if this video made things feel clearer, if it helped you realize trading doesn't need to take over your life, then you'll probably find the rest of the content on this YouTube channel useful as well. No hype, no shortcuts, just realistic trading education. So if that sounds like your kind of approach, make sure you're subscribed, and I'll see you guys in the next one.